Hello and welcome to the weekly market commentary. I'm your host Alex Chalekian of LPL Financial. Let's review the markets from last week. The markets crept higher for another week, setting all-time highs. We saw the indexes such as the S&P 500 creep up 0.24%, the Dow Jones Industrial was up 0.14%, and the Nasdaq was up 1.69%. There was a number of clients that reported earnings last week. We had Hewlett Packard report its fourth quarter earnings amid news of a split of the company. However, the split will not occur until the end of 2015 and will split the tech giant into two publicly traded companies. You're going to have Hewlett Packard Enterprise and HP Inc. Now, shares of HP rose even after reporting their revenue dropped on weak enterprise demand. But Wall Street seemed to ignore all of that and is optimistic that the company's margin may benefit from their restructuring plan. Then we had shares of TiVo, which dropped 8% after the company's earnings of 6 cents per share missed analyst estimates and declined 33% from the prior year. Tiffany reported third quarter sales fell on weak demand in Japan. They cut their sales forecast, citing the strong dollar, but same-store sales sparkled, sending the shares higher. We also had some economic news last week. GDP was revised up 3.9% quarter over quarter. New home sales were at 458,000, the initial jobless claims were at 313,000, and consumer sentiment was at 88.8. Let's take a look at the week ahead. This week we're going to get the PMI numbers, ISM manufacturing, vehicle sales, productivity, employment reports, and the jobless claims. We also have earnings reports this week from Radio Shack, Abercrombie, Royal Bank of Canada, Barnes & Noble, Dollar General, Kroger, Sears Holdings, and Smith & Wesson. Now, if investors around the world were voting on their favorite stock market, there is little doubt the U.S. markets would finish near the top. Barron's explained, for the past 3 years, Wall Street has been trouncing the world's other markets, inducing investors to pile in and bail on other assets. So how popular are U.S. markets? The Standard & Poor's 500 index has not moved lower for 4 consecutive days during 2014. According to experts cited by Barron's. That breaks S&P 500's previous record for the longest period in a calendar year without 4 down days in a row, which happened in 1997. The streak ended in late August of that year. Although the U.S. economic growth during the middle quarters of 2014 was the fastest in a decade, the Wall Street Journal suggested the improvement might be a modest acceleration rather than a major breakout. They cautioned U.S. exports and military spending made attractive contributions to third quarter growth, but that could change if there is a global slowdown or the government cuts military budgets. Thank you for watching our video. We'd love to hear your comments. Please visit our website www.lakeavfinancial.com to subscribe to our newsletter and read about other blog posts. And remember, at Lake Avenue Financial, we manage your wealth with your goals in mind. Thank you for watching.